today on the Tearsheet Podcast.
And I don't think stablecoins by definition are in the mainstream yet or even fully understood. But when you explain to someone that a stablecoin is $1, in our case, $1 in equals $1 of digital, USDP out. That's something I think people can put their brains around. I think for stablecoins, it's not a matter of if anymore, but when and how and what are the use cases that come up for stablecoins to really be viable.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. As the industry looks at what's happening in crypto, there's emerged an idea that the way the financial industry bridges the old world with the new is via stablecoins, like crypto tied to the US dollar, for example. Is that true? To explore this idea, I sat with Mike Coscetta, head of revenue at Paxos. As an infrastructure player, his firm works with many of the top brands with crypto offerings, like PayPal. I wanted to know more about stablecoins and some of the trends at play here. The following is my conversation with head of revenue at Paxos, Mike Coscetta.
Hey, Zach. I'm Mike Coscetta. I'm the head of revenue at Paxos, and puts me in charge of all of our sales, business development, partnerships, customer success, our trading ecosystem. And, we work with the most regulated, the highest quality enterprise businesses in the world, really looking to bridge the gap between the traditional world that they know and come from, and excited to enter the future of whatever we want to call it, Web3, crypto, the future of stable coins. There's a lot we touch on. And, Paxos is an enterprise infrastructure business. So we love to power our customers and give them a chance to really compete in the modern financial world.
Awesome. At Tearsheet, we talk about that intersection you just described, Mike, as the bank chain. So like banking and blockchain kind of together. Let's talk about, before we talk about anything specific like stablecoins, which is, I do have a few questions for you. Like, where are we and where do you think we are in this rollout? You're an enterprise infrastructure company. You're working with some of the best brands out there. Where are we if you were looking at this as use whatever metaphor you want? It's a 4-quarter game, it's a 9 innings, whatever. Where do you, or just, I guess, place us on a map?
Sure. I'd say just at a very high level, we are still extremely early. It's a new market in many, many ways. I think people are learning not only just what the infrastructure has to be to power this market, what the assets within the market have to be, what are the use cases of them. And as you think about these things, the consumer changes, businesses change, regulations change, macro events happen and could be catalysts or could be hindrances to the expansion and development of these markets. So in a 9-inning baseball game, we're probably in the 2nd inning. I think we're still getting our players adjusted and aligned. And I think we're still trying to figure out, the game we're playing, because the field is changing. The size of the field is changing. The shape of the field is changing. And I think that makes it incredibly fascinating and interesting. At the same time, it could be terrifying. And for a business or a person who's been in this space, meaning finance or financial services for decades, this could be really, really, vertiginous and drive you kind of a little mad trying to figure out what is the game we're trying to play, and who can help, how can people help, what do we do short-term, medium-term, long-term, and I think there's a very long game in front of us.
I think that was a great way to describe it. So what do we need, Mike, I guess, to accelerate adoption, to move into the next further innings? What are some of the hurdles here?
Yeah, I mean, I think just like if to use the game analogy, not to beat it to death, but games tend to have pretty clear dimensions of what is the shape and size of the field we're playing on and acting on, and they tend to have a very clear set of rules. So it's a place where I think regulation is not only inevitable, but I actually think it's really desired. I think regulation gives clarity. I think regulation in many cases gives people the opportunity to showcase trust, stability, certainty, things that people typically want associated with money. And when money loses that, stability, certainty, and trust, you tend to see a lot of inefficiencies and a lot of problematic things that start to happen, in the world. So I would say a clear set of rules. And I would just say for companies exploring the space and thinking about what is possible, just to identify short-term opportunities. What are quick wins? What are quick opportunities that can be solved and fulfilled, using new technology, whether it's blockchain broadly, whether it's cryptocurrency very specifically, whether it's a stable coin, to do things that maybe the company's always envisioned to do. So I think curiosity and creativity are also needed right now, because this is a new era And I think there are possibilities here that maybe no one ever thought were possible. But with blockchain, they truly become not only possible, but probably also inevitable.
So it's interesting that you said that it's calling on creativity, and for an industry that's heavily regulated and looking for some clarity from regulations, it's hard to be creative in that milieu. Like how would you encourage a client or prospect that you're talking to be creative within this sort of this game without clear rules, without clear. I mean, I guess there is a clear point system, and that's money.
Yeah.
But beyond that, it's still sort of, we're still trying to make our way through this all.
Yeah. So I'll answer that in a few ways. I think the creativity first and foremost has to happen from a company saying, what is the goal I'm trying to achieve, and what is in the best interest of my customer, whether that's a business, a merchant, a partner, an end user. What is the benefit to that individual or to that business that I as a provider can give to them, and think backwards as to what some of the opportunities and advantages are to eliminate some of the inefficiencies and some of the challenges with moving money, especially globally today. And I would say it's not an unregulated field, right? Because all of our customers are regulated. Mm-hmm. Many of the people probably listening to your podcast are very regulated. Therefore, even though the crypto universe in general may not by definition be regulated, these companies can only work with partners who are regulated. So regulation shouldn't be a hindrance. It shouldn't be a hamper. It should just be a clarification and a trustworthiness kind of anointment, of any partner. So I would sum it up to say, be creative with what the end customer or your merchant customer needs. At the same time, look for and work with regulated and reliable partners who can give you that clarity and certainty, that they're treating the business and treating money and treating your customers with the same level of certainty and trustworthiness that you would want to be able to provide to your own end customers.
Got it. And there seems to be like an accepted truth. I don't know if this is true, but it seems to be accepted that the way the traditional industry is going to leg into crypto or blockchain or whatever you want to call it, bank chain, the way we call it here at Tearsheet, it's going to be through stablecoin. Can you address that statement? Do you think that's true?
I think it's one of the places where businesses and customers truly understand what they're talking about. And I don't think stablecoins by definition are in the mainstream yet or even fully understood. But when you explain to someone that a stablecoin is $1, in our case, $1 in equals $1 of digital, USDP out. That's something I think people can put their brains around. I think for stablecoins, it's not a matter of if anymore, but when and how and what are the use cases that come up for stablecoins to really be viable. And when you look at how digital dollars have started to evolve, it's a great indicator, I think, to the Fed. That privately issued stablecoins could really further the strength of US dollars broadly, and then provide additional use cases, additional value and utility to the viability, of a US dollar. If you think about moving money around the world globally, if you think about moving money fast and for free, and eliminating, inefficiencies along the way, and again, providing that really good use case to an end customer, I think that's what the Federal Reserve wants, right? With a digital dollar, I think that's what we would want. And I think for many of the customers we speak to, especially the very, very regulated ones, that's exactly the type of experience they're looking to provide to their business customers, to their consumer customers. And, a great example, we're working on this right now with a company, MasterCard. Mm-hmm. It's a public pilot that they've been running to really build the infrastructure to allow them to settle faster with their merchants and issuers, right, using stablecoin, so that a small business owner can get paid faster from those credit card receipts, and the end user will get a better product as a result. So it's a very good example of a very traditional business that's found a way to take stablecoin and bridge the gap between the acquiring world, the issuer world, the network world, mm-hmm. but to just really, at the end of the day, provide a better experience for everyone.
Got it. So I'd like to drill further down, I guess, into some of the other use cases that you guys are seeing for stablecoins. You mentioned the MasterCard example. Can you give some others?
Yeah, I mean, it's already been announced, but PayPal, has discussed that they're going to be launching a stablecoin using our, white label USDP, as the infrastructure. If you think about what PayPal is, it's one of the largest networks in the world of consumers and businesses. So the ability for individuals to send money to anyone around the world in their network, and to be able to do that instantly, the ability for an individual to pay a business with stablecoin, the ability for that business to potentially pay someone, whether it could be an employee or a customer, it could be a loyalty program or a cashback program, to be able to do that digitally. I think it's one of the simplest examples that we've seen, and very exciting time because we've seen a lot of others come into the pipeline for our team now, starting to really fully understand what stablecoin can do to, again, not only open up markets broadly, but to add security, to add safety. Even if you look at the remittance corridor between the U.S. and Latin America, amazing opportunity for people to be able to send money back and forth to family members, to friends, to acquaintances, and again, to do it in a really safe, secure way. So I think we'll see the proliferation of these use cases expand dramatically. We're seeing gaming marketplaces come into play. We're seeing, regular e-commerce marketplaces come in, because I think they all view stablecoin the same thing, which is an ability to do commerce faster, easier, more global, and more secure than they probably are able to do today.
I'm curious, it sounds like some of those use cases are coming to you as opposed to the sales team going out and selling it. Like, what does the push-pull look like on that?
I mean, listen, I as a sales guy at heart, it's weird to see that we have such inbound demand. And, I don't want to make this a commercial, about us, but I think the reality is when you see one person move in the financial space, it opens the door and gives that hope that, hey, if one can do it, anyone can do it. And sometimes that's because there may have been concern about regulation or whether this would actually drive adoption. And I think when they see how regulated Paxos is and the level of transparency that we have both with the federal government, with our OCC trust, with the New York State Department of Financial Services and our trust through New York and MTLs. But I think the reality is customers want to work with regulated partners. And there's a lot of scrutiny coming to stablecoin today about what the reserve makeup of certain companies, stablecoin may be, whether that money is being reinvested, whether it's being lent out. We have a belief that stablecoins should be 100% backed, fully with cash and cash equivalents, that they shouldn't be rehypothecated, they shouldn't be lent out. And I think that gives certainty for other companies to say, okay, if it truly is $1 and I can remit for $1 at any time in exchange for $1, then that's a company I would want to work with. So we're very lucky to see that. And I think we continue to be chosen by some of the largest, most respected fintech and financial service companies out there because of the way we treat regulation and the way we're able to build kind of broad infrastructure along the way to do a lot more than just move money. But we could talk about that as well.
Right. I see how important regulation is. Before we move on to other things, though, we talked about payment networks, talked about the card companies. What about the traditional, financial institution, a bank? What's their role in sort of the emerging, crypto ecosystem?
So, I think banks have to answer three questions at all times, which is number one, how do I retain my business customer? How do I retain my end user, my end consumer customer? And how do I retain the maximum amount of deposits, right, from those individuals and businesses at any time? So you have to provide value. You have to offer value. And I think one of the most common things we've heard from very traditional banks and financial service companies is that they see users leaving. They see deposits leaving. They see direct deposit going into competitors and other, digital wallets and digital bank accounts that's not coming in there. So when asked and to find out what's the reason, a lot of them point to crypto. A lot of those users point to crypto, that they want to convert some of their pay into crypto, that they want to be able to easily purchase crypto or access US dollars in a digital way. And they can't do that from their traditional interface. So the demand that we see from banks tends to come around, how do I give access to my users, my end customer, to crypto? Outside of the United States of America, we tend to see a lot of banks who want to be able to provide dollar access to their end customers. And that's not always easy in some of those countries, but gaining access to a stable coin could be one of those ways. And I think banks are also always looking at how do they move money around their own ecosystem in a faster, more efficient way. So settlements, and just kind of large money movement in general is a great opportunity for them to use stablecoin, either with their merchant partners, with their acquirer partners, or even within the bank itself.
So it sounds like from what you're saying, Mike, is that doesn't sound like necessarily a threat to the role traditional banks play in the ecosystem. It doesn't even sound like you're describing a new role for these banks. Um, it just sounds like you're integrating some tools, right? I mean, am I understanding that correctly?
That's Zach, I think that's probably the best way of putting it, right?
Mm-hmm.
And I think that's how banks should think about this, which is that this is not a bank becoming a brand new company in a brand new industry. This is a bank offering financial type products to its end users and its end customers, businesses, whoever, to be able to do the similar banking activities that they've always been able to do with just regular fiat cash. And there are regulations around who can custody that and how that gets moved around, and that's very obvious, right? And that's why we have a very strong business, because we're able to provide that custody, security, and infrastructure, and depository, kind of provenance for people to feel really good about how that money is being moved, where it's being moved, how it's being protected. And I think banks should look at crypto as an additive opportunity to really enhance the experience of their customer, because the customers keep saying the same thing. They don't necessarily want to go to all these other apps or platforms. They would probably prefer to keep their money all in one place.
Mm-hmm.
And the more money they have in one place, the more that consumer can enrich their own value from the bank. They can borrow against some of these assets. Maybe they can get a mortgage against them down the line. Maybe they buy a house with crypto, and the bank can participate in that transaction. Whereas today, most of those banks are sitting on the sidelines watching that money move without their participation in it.
Are you seeing any FIs come to you saying, like, we're really rethinking what it means to be a bank? Are you hearing from financial institutions that they're thinking along those lines?
We definitely are. I think it's coming to us in a few different buckets. So a public announcement went out from Israel a few weeks back that Bank Leumi, second largest bank in Israel, is now offering crypto, ability to buy, sell, and hold crypto through its app called Pepper. That's all powered by Paxos. It's an example of a very traditional bank, a very traditional institution, publicly traded on stock exchange, to say, you know what, if we don't think about this and if we don't incorporate this, we're going to be looked at like a dinosaur. And we don't want to fossilize, when there's a chance to really move and move forward and to do it very, very quickly. But as you can imagine, banks tend to have the highest level of regulatory scrutiny, and therefore can only and will only partner with companies that have a similar perspective on regulation. And I think it's been really fun to watch this process evolve from the inside, of seeing banks now become much more not only amenable to the idea, but very excited about it. And then to be very creative about what are the ways that crypto and blockchain and stablecoin can enhance the user experience, can enhance the banking experience, and at the same time, give them an opportunity to really build on technology and to provide a better experience overall to everyone in their ecosystem.
What are some of the challenges you're facing, I guess, internally in terms of scaling your growth, in terms of being able to meet the demands of some of these FIs? What does that look like?
Well, the basic answer is we're trying to hire. We're growing like crazy. We are an amazing business, and I think we're building really long-term technology and doing it in a very nascent industry. So to me, that's a very exciting time. It's a very exciting place to be. But I think almost every technology company out there right now is dealing with the same challenge, which is just hiring enough really good people at the speed to meet the demand that we're seeing. Second thing is these customers are huge. They have extremely stringent due diligence processes and checks that we have to go through, whether it be security, physical security, information security, custodial security, about where the money is being held, how are crypto keys being managed, all that stuff. So we need to have all hands on deck to be able to support these deals, not only to win them, but most importantly, to help those companies become successful, launching whatever the product is in our ecosystem that they're using. So I would put in a plug to say, yes, Paxos is definitely hiring. We're always looking for great people. And we're looking for people who really love to serve and support as an infrastructure, the success of our partner customers to grow their business, to drive adoption with their end users, and to participate again in really the future of finance.
And what about your own career trajectory? If I'm not mistaken, you were at Square back in the heyday, and then Compass, and it seemed like you had a focus on SMB and merchant services and stuff like that. Like, how has your career trajectory evolved? Like, what was the stretch for you moving into this role?
So, I mean, I wanted to get back into true fintech for a while. I mean, Square is an amazing business, and you can't work under Jack Dorsey for years and not become a believer in the world of blockchain,
You drank
especially
the
in
Kool-Aid?
Bitcoin. It's easy to. It's easy to. He's been right too many times, and
Yeah, it's true.
I love what Jack has done. At the same time, to me, Square is an amazing business that was fun to watch grow and to scale up. One off to Compass to take on a much broader set of roles and responsibilities, really running business units and P&Ls and building service organizations and doing more on the operational and revenue side in a business that has just exploded in size. I think Compass will do 7 billion in revenue or something this year. So getting to see it double, triple along the way and to see through an IPO was incredible. As many people on your podcast will know, there's no cooler sound than the bell of the New York Stock Exchange. So to be in there and see it and hear it is incredible. But again, in all honesty, I wanted to get into the crypto world. To me, what Paxos represented was an opportunity to play the long-term, focus on the space of building financial infrastructure and really to help re-platform the infrastructure of the future of finance. And, I think the financial infrastructure system is old, it's risky, it's built on, technology that I don't think anyone would build today. So it was really to fulfill the mission that Paxos talked about, which is to enable trustworthy and instant movement of money, or really any asset at the speed of the internet. And just thinking about what that could mean for the future of finance, technology, everything is, really incredible. And I love the infrastructure only perspective. It puts us as a partner of our customers versus competing with them for their end customers. And it's a way of thinking through, long-term, how do all assets move to the blockchain, not just crypto. I think crypto's the first step, but how do you move dollars? How do you move gold? How do you move real estate? How do you move securities? And many of these things we're doing today, and we'll look to continue to grow them. And that was exciting to me. And I think that would probably excite a lot of people, but it definitely tugged at me.
I really appreciate that. And just getting back to what you just said, like I know you guys have a tokenized version of gold. And there has been talk about all these algorithmic stable coins. Like everything seems to have a plus and a minus to it. I mean, it feels like, the dollar based, the fiat based, at least, stable coins are going to win out. But maybe you could talk a little bit about sort of that jockeying that's going on there.
Listen, there are definitely different goals that people have in the world for their money. Some people want to gamble it. Some people want to risk it. Some people want to be in for the really high beta oscillations that'll happen in the market because they want to catch, something on the upswing. I think for us, a stable coin is a stable coin. It's meant to be stable. It's meant to be a dollar. A dollar in is meant to be a dollar when you go to take it out with no uncertainty or risk that if everyone wanted their dollars at the same time, that people would be able to get them. And, we're regulated by the New York DFS, which means our issuance, reserves of our stablecoin, everything related to stablecoin is overseen actively by the DFS. And to change any of that would actually require express regulatory approval. I think that's what most people want with their dollars. Now, that doesn't mean people might not want a chance at a 50 or 100 or 200% or 5,000% return. But I think the way you treat that money is different from the way you treat your cash and the money that you want to have there the next day. Our reserves are audited. Again, they're backed 1-to-1 cash and cash equivalents. They're held bankruptcy remote. Algorithmic deposits and algorithmic reserves. I think it's a fascinating thing. I think it's a fascinating space, but it would be very hard for me to go tell my mom, go put your $100 in here because maybe it'll be 200 in a year or maybe it won't exist in a year. That's a hard place to be. It doesn't mean there's not a room for that. But I think, again, people want certainty. They want stability. And, I think that's why we've seen such mass demand, especially recently, for our stable coin, because I think it's something people understand they could trust. And that trust is backed by, our regulators as well.
I have one last question for you, Mike, before I let you
Sure.
go. We started out talking about regulation, about sort of a lack of clarity there. I think one of the things that's also happening is regulators are trying to figure out who's in charge here. Can you talk about the dynamic that's playing out there? Like what's happening? How do you see that playing out?
Yeah, I think, I can only speak from our perspective, but, we would say regulators are our partner, and they're meant to be enablers, of new technology and spaces. But at the same time, they are the people, ensuring the security of the end customer, of the money at stake. And they're also there to ensure transparency, that people are aware of what they're doing, why they're doing it, how they're doing it. And I think that's actually a really critical role of regulators everywhere. That said, we seek to continue to be a partner to help educate regulators all over the world. We work very closely with many of them. We're licensed in the US, we're licensed in Singapore, we're licensed in Latin America. And these licenses are not easy, to get. And I think the way you get them is by being very transparent and by being that partner. And for us, our goal is not to go, win the Bitcoin game or the Ethereum game. Our goal is to really build long-term infrastructure and to help the entire financial ecosystem move at the speed of the internet, and to really help individuals benefit, from really what is the future, of finance. And it's how the internet evolves. It went from moving information, right, to moving content, and interacting across multiple platforms, and what you would probably call Web 2. And as we discussed earlier, Web 3, is really the interaction in real time of information, of value, right, of people, of assets. And we think there's a great opportunity for that, and I'm sure regulators want to see it done right. And we agree, and we want to do it with them. And I think our customers come to us asking for the same level of transparency and security.
It's been great chatting with you, Mike. I appreciate you joining us on the Tearsheet Podcast today.
Thank you, Zach. Appreciate the time.